Welcome to another S&P 500 analysis. Today is February 10, 2023. I'm sensing the market is shifting its focus toward the defensive sector. Remember we talked about that a few days ago or a few videos ago that we're sensing that the Dow Jones Industrial could be outperform the NASDAQ, especially the NASDAQ 100, the tech-oriented stock, and shifting away from the tech and the high growth stock back into the defensive stock. And I believe that we might be starting to see the beginning of that. So in this video, we want to take a look at the price action of the indexes, the market sentiment, the market internals, and also the US dollar, the 10-year yield, gold, silver, oil market, and see if this shift is taking place or is beginning to take place. So stay tuned. Let's start with the performance of the indexes. Looking at the indexes right now, you see that the Dow Jones Industrial and the New York Stock Exchange Composite on Friday was two of the best performer, and the NASDAQ 100 was the worst performer. It was down 0.62%, while the Dow Jones Industrial was up 0.5%. And on a week-to-date basis, you could also see that the Dow Jones Industrial was the best performer, it's only down 0.17%, and the Russell 2000 was the worst performer, down 3.36%, and the NASDAQ 100 was down 2.14%. So from this table here, we're definitely seeing a shift away from the growth and the small cap stock and the tech-oriented NASDAQ stock there, because remember, since the beginning of the year, we see the NASDAQ 100 and the tech-oriented stock basically have been outperforming the Dow Jones Industrial. The Dow Jones Industrial have been lagging. So right now we are beginning to see a little bit of a change in that focus. So we could start seeing the rotation back into the defensive stock and out of the small cap, high growth, and the tech-oriented stock. And here's what the S&P 500 did for the week. You see the range is 115 points, and it lost just a little bit over 1%. It lost 46 points for the week, and it printed an inside day sort of bearish candle, or inside week bearish candle, but it is still above this declining trend line, and also close above this 10-week and the 40-week moving average, and on a one-time framing up. So all in all, the trend in the near term is still pointing upwards, so we'll keep an eye on that. And now let's go and take a look at the market sentiment and the internals before we go and take a look at the indexes price action in a little bit more detail. Looking at the sentiment chart here, you can see that the VIX is up above this 20 level, sitting at 20.5, and the put-call ratio is getting close to this 1 level right now, sitting at 0.96 on Friday. And Friday was a ho-hum day. It's basically a range day, and the up-down volume ratio is pretty neutral at 1-to-1, pretty much. So there's no favor of the upside or the downside, and the daily advanced decline is very neutral as well. It's only 148 more advancing issue than declining issue. But most of the day, it was actually more decliner than advancer. New high, new low, also pretty ho-hum. 17 stock make new 52-week low, and 43 stock make new 52-week high. And the cumulative advanced decline line is pretty much flat, and with a little movement from the S&P 500. And for the NASDAQ actually was the weakest performer on Friday. It finished with a doji type of a candle, and also the up-down volume ratio was favoring on the downside with a 1.7 to 1. And there were 630 more declining issue than advancing issue. So you see that the NASDAQ 100 was down 78 points and 0.62%. Actually, it was down at one time more than 100 points. And here on the new high, new low, we got 84 stock make new 52-week low, and 60 stock make new 52-week high. And the advanced decline, cumulative advanced decline line came down along with the NASDAQ 100. So no divergence. Now let's take a look at the indexes, starting off with the S&P 500. As you can see, the S&P 500 closed just right above the lower range of the expected move, and inside of this balance area here. So for the coming week, we'll be watching, will the price be able to move back away from this balance area or will it remain inside of this balance area? And for next week, the upper range of the weekly expected move is being priced in somewhere between 42.05 and 41.92. And the lower range is somewhere between 39.88 and 39.60. So the scenario that I'd be watching is for the upside, if the price could move up and stay above this 41.20 area, then I'd be watching for a price to come up and try to tag this upper range and also try to fill this gap. Now, if the price remain inside of this balance area, then I'd be looking for price to retrace back down into this lower range between 39.88 and 39.60 and possibly test this trend line. Because eventually, if it remain inside of this balance area, price will likely retrace all the way back down to this area here, this lower edge, somewhere near the 3800 level. And looking at the ETF for the S&P 500, the SPY see that it is inside of this balance area and close right above the lower edge of the expected move. So we'll see will it be able to come back up, get above this 410 level next week, and then move up. And here's next week's expected move. The upper range is between 419.60 and 418.40, and the lower range is between 397.70 and 395. So if it could get above this 410 area, then I'll be looking at this expected move on the upper range at 419, 420 area and watch for this gap to possibly get filled. Now, if it's stay inside of this balance area, then I'd be looking for the price to come down to possibly to this 395 area. And here's the NASDAQ 100. You see the NASDAQ 100 did a little bit of a doji type of candle on Friday, and it tagged the lower range of the expected move and closed just a little bit above that. So right now, we're basically looking to see will the NASDAQ come back in next week inside of this balance area and work itself downward, or would it be able to continue to bounce off and move up to the 13,000 area? And for the coming week, the upper range of the expected move for the NASDAQ 100 is 12,790 and 12,714. And the lower range is between 11,895 and 11,810. So we are looking to see what it'll be able to push up into this upper range here. Now, there is a gap up here somewhere above the 13,200. So if it could move up above this upper range, it could make its way toward this gap here at 13,200. If it come back into this balance area, then we'd be looking for this lower range to get tagged. That's between this 11,895 and 11,810 area, and then possibly come down to this 11,500 level. Looking at the ETF for the NASDAQ 100, the QQQ, we see that the price closed just right above this lower range of the expected move and sitting above this edge of this balance area. So for the coming week, we'll be looking at a upper range somewhere between 312 and 310, and the lower range somewhere around 289 and 287. And if the price could come back up above this 305, then look for a possible move toward this upper range of the expected move. But if it come down and dip back inside of this balance area, then look for the price to come down to this lower range and also possibly get down to this composite point of control near 282. And look at the Russell 2000. The Russell 2000 also came down to near the edge of this balance area and closed right above it. And it's right now sitting somewhere near this 1920 area. So for the coming week, if it could move back above this 165, then we'd be watching this 180 zone to see what it get back above it and move up toward this above 2000 area. But if it dips back inside of this balance area, then we'd be looking for retracement, possibly back down to this 800 level and eventually back to this 1720 area at the lower edge of this balance area. And looking at the IWM, the ETF for the Russell 2000, we see that it closed just right above this edge here of this balance area and underneath the lower range of the expected move. So for the coming week, the upper range we'll be watching for it will be between 197 and 196, and the lower range is between 184 and 183. So the price could move back up above this 194 area, then we'd be looking for the upper range of the expected move to be in play. But if it dips back inside of this balance area, then we'd be looking at this lower range of the expected move and come below this 185 and into this 183. And there is a composite point of control here right near 182. So that could also be in play. And here on the Dow Jones Transportation, we see the Dow Jones Transportation pull back into this 15,000 area, this zone here. So we'll be watching next week. Would it be able to find support and bounce back up? And if it doesn't, then look for this gap to get filled somewhere in the 14,700 area and possibly move down toward this 14,200 zone. And for the Dow Jones Industrial, the Dow Jones Industrial is still trapped inside of this range here. So we'll see. We'll be able to move up and get above this 34,400 next week and possibly come up to this level here near the 34,800. Now, if it doesn't and it come down, then we'll look for this 33,100 area, this zone here to get tagged. And for the New York Stock Exchange Composite Index, you see that it is sitting right near this 15,900 and 15,800 price zone here. So next week, if it could push back up, then we'd be looking for this 16,200. But if it dips back down, then look for this 15,600 area. Here, looking at the 10-year yield, I'm looking at the possibility of coming back up here at the 3.9. And here's the US dollar index. I'm also looking for the dollar to bounce off of here and break above this 103.90 and come up to this 104.93 here. So getting back up to near this 105. And here on the US dollar future, you can see that it is bouncing off here. Right now sitting at 103.47. So I'm looking for the coming week to maybe get back up here at 104.65 and possibly move up toward this 105.86. And for crude oil, if crude oil could hold above this trend line here, then I'm looking for crude oil to come up to this 82.76 here, this zone here. So we'll see how it play out on this breaking this trend line. Looking at silver, silver might be getting a bounce off near this zone here at 21.84. So if it could continue to move up, I'd be looking at this 22.65 and see would it be able to stay above that next week and pushes up here to this 23.26. And gold been pulling back, so I'm looking for a little bit of a bounce when it get down to this 1857 zone here to see what we see a bounce on gold and maybe bounce back up into this 1910. And finally, looking at the E-mini SP500, the ES, looking at this market profile chart, as you can see on Friday, it was pretty much of a range day, so just kind of chop around. And remember I mentioned about this level here, this FOMC seen a decline at 40.73 to keep an eye on for a potential tag. And you see that on Friday, it came down. It actually came down on target 2 times, and it bounced off from it. So we'll have to keep an eye on it to see would it be able to come down and stay below this FOMC level next week. And if it does, then these poor low from January, from end of January, will be in play, and that will be somewhere down at that 40.33 area. Okay, so keep an eye on that. But if somehow this market decide to move higher, then look for the single print from the Thursday structure, between 41.29 and 41.26, and also the point of control at 41.16 and 3/4 to get tagged on the coming days. So keep an eye on these levels for the next couple of days, the next couple of trading sessions, especially when the CPI came out on Tuesday. I hope you find this video to be useful and informative. If you are new to this channel, be sure to click the subscribe and be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.